Today we'll talk about a recession-proof compounder which reached a very low valuation. This is the type of stock you wanna buy and hold on to forever. The stock I'm going to analyze today is CARLSBERG, the Danish beer maker. This is a company selling beers mostly, but also non-alcoholic beverages. The main brands of the company are CARLSBERG, of course, Tuborg, and Blanc. Alcohol-free brews are also doing very well. So the business is fairly simple. The company makes and sells beers mostly. And recently the valuation got extremely interesting. The forward price earnings ratio is 13.9, which is below the lows reached during the pandemics. It's not the all-time low, which was reached in 2011, but it's a very low valuation. Before we start looking into the company, please remember to leave a like and subscribe to my YouTube channel if you're new, to help me reach 1000 subscribers. And also feel free to share the video with your friends. The past results of the company have been pretty decent, with an okayish growth of revenues and an acceptable improvement of EBIT margin. These are not unbelievable results, but they are decent and stable. EPS improved way more than operating income because the company does a lot of buybacks. Since 2019 they started going very hard on buybacks, and they also pay a very good dividend, with a forward dividend yield of 3.4%. The company has a policy of paying 50% of net income in dividends. Also return on capital and return on equity are really good. So I have to say that I really like this company, and I would love to invest in such a recession-proof stock, because I never actually bought such a type of company. I would like to buy something like this to make it become my Coca-Cola, as it is for Warren Buffett. So the numbers are good, the business is really interesting. Now is the time to show you my valuation. For the next few years I projected a revenue growth of around 4 to 5% to reach revenues of 93.8 billion in 2029. This is Danish kroner. Then I projected an EBIT margin of 15.3%. I subtracted the financial expenses, which I supposed are going to be around 300 million, subtracting the positive financial income. Then I subtracted taxes, which I supposed could be around 19%, it could be even 20 or 21%, something like that. But 19 is a level in line with the past of the company. Then I subtracted also minority interest to reach a net income of 10.2 billion in 2029. So I had to calculate the EPS. So first thing, I had to consider stock-based compensation for the next 5 years and buybacks, and I reached an EPS of 89.9. So applying a price earnings ratio between 15 and 16, the stock could reach something between 1,300 and 1,400 per share in 2029. And right now the stock is at 780, so it's a pretty decent possible performance, to which we should add a cumulative dividend of 167 almost. So the performance would be pretty good with a stable and recession-proof company, but for my taste I wouldn't still invest in this company because I want to make at least 20% per year, while here the performance would be more around 14% per year, something like that. So still a little bit too low. But I really like this stock and I'm keeping it in my watch list. Please let me know what you think about this company, and please remember to leave a like and subscribe to my YouTube channel if you're new. See you next time. Bye!